Welcome, Dan Frio,
Hey,
my buddy
buddy.
from Chicago.
My buddy, how you doing? Did you see the
81
weather the
degrees.
other day when I text you when I was visiting my mom?
Mhm.
When I text you, I think it was Saturday or Sunday when I text you the pictures of me and my mom. We got like right after I text you, we got like 6 inches of snow. It was brutal. So
We're having a very unusual warm streak. This is usually second week of December is usually cold.
yeah.
Cover your plants, frost, everything. We're freaking 82 degrees yesterday.
Oh wow.
I
I
know.
think I flew back Sunday. I know we got to get to the show, so my apologies. I flew back on Sunday and it was like minus 19 wind chill. So okay, get to what they
Yeah.
want to
Oh,
talk about.
boy. Well, I thought it'd be fun that you reached out to me and said, "Hey, let's get caught up,"
Yeah,
and
nice
we
to see
should.
you.
There's a lot of stuff going on.
Yeah,
And
it's been a kind of a cool few months. So let's talk about you. And then I'll give you some of my thoughts on what I think might be going on. But
okay,
nice to see
okay.
you, my friend.
Oh, thanks. And well, let me tell you, there's something I've looked at here in our market that I really want to highlight for people, and that is the over 55 communities. They're not doing well. And I'll show you as an example here. Here's months of supply in Chandler. Now, their months supply are 2.3. Chandler's doing well. Now, if you just go south of Chandler, because Chandler and Sun Lakes butt right up next to each other. Sun Lakes is an over 55 community, and their months of supply is 6, 3 times. And I run into the same thing when I go up to Sun City West, which is up in the northern part here. Their month supply, I think they're just starting to track it. There's 5.1. That's not working. Something's wrong with their chart. Let me try Sun City. Sun City is sitting here at 4.2. If I go to the City of Surprise, which is near there, and they are at 4.4. So they're kind of even. But if you go around and you look at the inventory that's available in these retirement communities, and they're all over the place,
Yeah.
it's spiked up. Now, the first thing that comes to your mind is it's the Canadians, and it could be. The Canadians in our over 55 market are about 5% to 6%. And they have chosen this year not to come down, not all of them, but enough. And their dollar's worth 71 cents. So politically, they're thumbing their nose at us. And monetarily, they're going, it's 40% more. My brother's at an over 55 park in Palm Springs. He's seeing the exact same thing.
Here's I hate to be contrarian, but I'll give you kind of the other coast. So last I spent, I think it was most of October, about 2-3 weeks in between October and November down in Florida, and my cousin lives up in the Villages. Have you ever been there?
No, but I've
It's
seen it.
crazy, and I think most of it's 55 and older. They bought up this land by the miles and they just keep building and building and building, and it's way inland. Their home prices they're going up, and it's just, and I asked that exact question. I got a cousin that lives down there. I'm like, so what's up with the Canadians? And his comment to me, and I apologize, they don't give a shit. They're coming down like they always have. Now that's his comment, and this was in Florida. So you guys have a different market and probably a different clientele.
Yeah, it's hard to tell. I mean, I did a video on Canada one time. Oh man, people were just
I saw
beating me up and then beating each other up. It was a big slugfest.
It went viral though.
It did. It took off. Yeah, the thing about YouTube, if you get people to argue with each other,
Seriously,
you'll get views. So
yeah.
Dan, you ignorant. No. So so I'm looking at it and I'm thinking, okay, well, if most of them bought in 2012 here when the prices were pretty low and the dollar was pretty much at parity back in 2012. Now it's worth 71 cents. A pretty good time for them to sell. Make a 39% return, right? I don't know how their taxes work or anything like that on capital gains, but on top of that, they're kind of aging out of their home. So in these over 55 areas, you either stay there until the day comes or you end up in long-term care, or you sell it and go home to be close to the kids instead of doing the snowbird thing. So we're seeing a lot of that. That's why there's a lot of turnover in the over 55s. Now, if you're sitting there in Minnesota or let's see, Chicago, and say, maybe there's some good deals to be had in some of the Arizona over 55 parks. Certainly everybody's decision to take a look at it, but it just,
Yeah.
it little radar went up for me when I was looking at that.
Well, here's the secret. I just did my 2026 forecast, and putting all the data together, you thunk your side up the head, or and it's like, well, the correlation is basically this: where's it affordable? Okay, and that might sound stupid. Okay, that's pretty simple. Here in Illinois, and I just pulled this up, and this was I was doing getting ready to do another video in Illinois. And I just pulled up the real estate taxes on this particular property, and I'm getting somewhere. The zip code is 60085. You're welcome to look it up if you want. You can go to smartasset.com and you can find this data on a $450,000 home. Now that's in Chicago, and that's an average, could be a starter home. The real estate taxes on that property are $12,047. That's $1,000 a month. Just in property taxes. That's in Illinois. So then you wonder why. I don't even, like, for example, me. I mean, why do we stay here? Well, all my kids and everything else are here. But I mean, the taxes here, kind of the political piece of all this. They get us on the taxes, and it's crazy. And that's what a lot of people don't talk about. Is when you're looking at a payment, any other part of the country, you're not going to have $12,000 in taxes. So these are all pieces of the puzzle that you just have to understand on what creates that affordability or unaffordability.
Pat says he's joining the chat since he wasn't invited to the party.
Come on.
Yeah. Want me to send you the link, Pat?
Join on in.
Yeah. Well, you know what? I'll put the link in the chat, and anybody that wants to join us can join us. That could be a fun party. So
do you have the ability to control that? I hope.
Yes. They come on the stage, and I can kick. So anyway, it's fun. We tried it before, and only one person did. So maybe Pat will jump in here. So yeah, I agree with you on taxes. And Arizona, as you know, is very tax favorable, but we're getting hit everywhere else. Insurance. Yeah. We've got comments here that says, how about California? I don't know a lot about California real estate. I don't have the resources that I have here, going in the Cromford Market Index, but I did see a national survey for both buyers, sellers, and realtors. I read it yesterday. Is all over the map. So everybody in the industry, including buyers and sellers, said it's 2026 going to be a good year, going to be a much better year. 67% of realtors says it's going to be a better year. But then the follow-up survey says, what do you think about the economy? All negative.
Yeah.
Everyone I don't see it. So there isn't a hesitancy. There's confusion and a disconnect.
Well, it's the problem is you get a lot of times and I always try to say it. I'm sorry, it's not what you want to hear, but it's probably the most logical outcome. It might not be the most logical outcome I want, but it's the most logical outcome. And you just have to say, okay, now how do we handle it? So you're going into a year. Here's what I always talk about is, I never really talked to your channel. So here's kind of, think of it this way. And I don't care if you hate Trump, love Trump, whatever. What do you know about him? I mean, he's got an ego, a huge ego. He made his fortunes in real estate. He's adamant about lower interest rates and the pumping up of the housing market. Do you think during his presidency we're going to have a housing crash?
No.
So that's what I'm trying to point into a lot of my videos. It's like, okay, you might want house prices to come down, but they haven't done anything in the last 4 years. You've gotten rates that went from 8 to now 6, but houses, the payments are still higher because you have these insurances and the taxes that just keep going up and up and up. So that is, it's like you're chasing your tail, it seems like.
Well, we're down 1.8% officially, I think, in our market. 1.8 to 2.8 for the year.
Yeah.
But not everywhere. In the below 500,000, we're down 15% from the peak in 2022. but last year and this year, we were just neck and neck in pending listings. And in fact, I'll see if I can pull up the chart, because every time I look at it, it's like they can't possibly be matching week after week, and they do. I'm sitting here trying to find it here while I'm talking to you, but it just let's see, pending listings. Here we go, all of them. Oh, that didn't work. Pending listings.
Or after this, we're going to get to the juicy stuff.
Here we are, right down here. Look at this. Every week, the same. The past 2 years, week after week after week.
What is that? Listings?
It's pending listings. The red number is this year. The turquoise number is last year. Every week, they're just hugging each other. Purple number is 2023. So the business activity has stayed the same. It's like so many buyers.
Yeah. So now I just saw, I was prepping for some stuff and whatever, and stupid me hit a crash video, and now all that crap's coming up. So foreclosures, that's one of the things that I just went through. What, do you see? I don't know if you have any beat on this. Do you see any foreclosures in your market?
No, there's too much equity.
Yeah, that's
and
what
to be honest with you, I mean, the foreclosures are, look, our unemployment rate's 3.8. So the people that were doing forbearances because of COVID, they entered into forbearance, and then the value of their home skyrocketed. They can get out of forbearance by refinancing. I mean, you know that game.
Oh yeah.
And so they're not in deep trouble. And what happens to us is the foreclosure numbers, people have a tendency to talk in percentages, up 10%, up 14%.
You took my thunder. I was going to say, you go up a tick from zero, because during COVID, I mean, this is what you and I even talked about during those times. It's like, there is no foreclosures because you can't foreclose. So then if you have one, oh my God, the numbers just went out the roof. So if you look historically, but areas, I get it, where areas, I talked to when I was down in Florida. If you're on the other side of the coast, like in the Gulf Coast, there's still areas that they're still waiting for their insurance money to rebuild the house during the hurricanes 3-4 years ago. So they're basically, those houses, people were just saying, screw it. They're walking away, letting the insurance companies mess with it, because they're like, okay, I can't afford the mortgage. I don't have a house. So yeah, those areas are going to get killed. But, and that's what a lot of people, the crash and doomers, you got this and you got that. But if you look nationally, it just doesn't, it looks like I think next year is probably going to be kind of like this year. Might get more people off the shelf. What's your take on that 85,000 people delisting?
I think that shows you the lack of desperation.
Okay. I was on the same page. That's the first thing I thought.
If this was a desperate market where you had to sell your house, there's no such thing as delisting.
Right. You lower the price.
Yeah, stay here.
Probably a lot of people don't even understand, it might get to the point where you can just give it to the bank, and the bank just lists it, where they called this back in the day like cash for keys and stuff like that. You actually just go to the bank and say, guys, I'm not making any more payments. I can't. Here's this. They'll foreclose or whatever. But but you just some areas you're still gonna the Florida pieces, but most of the area, unfortunately, is not. And now I'm starting to see all these crash. I just saw a video today, and then you take it. It's your show. It's now it was the 18-year housing cycle, in 2026 is the year of the crash. So
put some math behind it. I don't know. I mean, like you mentioned foreclosures, here they are in a graph.
Yeah.
Where's the panic?
That's I'd be the first one, and you'd be too. I try to be as unbiased as I can. If you're going to buy a house, God bless you. And if you want to, love to help. Should everybody have a home? No. Because there's risk, there's cost.
If I see numbers that raise an alarm, I'll speak up.
Same thing with me. I don't care. I'm going to tell my clients, hey, this market's bad. Maybe wait for it to crash and then jump in. But I don't come in every day saying the whole world's ending. And, it is, hey, if I don't mean to do this, but I'm like 80 away from 40,000 subscribers. So
no kidding.
Yeah. So it's kind of cool.
All right.
I was on your, what did you hit? 10,000. When did you have that show? Was
The
it
one
10?
about the Canadians?
No. You had a show that was like your 1,000th show, or
Oh, we had 1 million views.
that's what it was. Yes.
Yeah, that was, and you were on the show. We were celebrating
cool.
that. So
Yeah, that was cool.
you're doing really well. You've got such a large reach, and you're on. I mean, you work your butt off on this stuff, but you provide good stuff. I don't catch you every morning, but I catch you most of the morning. Marv here says prices are coming down, though. Just sellers not swallowing the fact the prices are lower now. Yeah, it depends on the area, but I call it wish pricing. I mean, they heard this, heard that, I'll price here, and it doesn't work. It's obviously the realtor's fault. So they fire a realtor, get another one, then they just take the house off the market.
So here's I'll give you an example. My mom, she lives, we grew up about 45 minutes from Pittsburgh, and we put her in a nursing home, as you know, and we put her house on the market, and it's this time of year. It was just 2 weeks ago. 4 days, we had 3 contracts, and we took one that was like 8,000 under asking, because I knew the market. I know where to price it. We're not desperate, so we're not, but I don't want to gouge anybody. So if you price it right, it's sold, and I hope the other people buying it are, have the years of happiness we had. But that's a market that I see a lot of.
Well, the thing that I'm seeing on asking prices is that you're seeing, and I'm trying to get clarification from the Cromford people, but the listing success rate's 97.1. That means you got 97.1% of the list price. Well, is that the final list price, or is that the original list price?
Oh, I got
I think it's the final list price.
Yeah, I'd assume that,
because there's no way, based on what I'm seeing, the people are getting, only 3% less of their original list pricing. So
I would almost,
because they start out here and then whittle down. Okay, now I got a contract. So when you hear of these prices coming down, put it in 2 buckets: list prices coming down, sold prices coming down, because there's a big difference.
Yeah.
List prices are, I think I can get 750. Sold price is, I got 600, but it's still 1.8% above last year. So, it's you can drive yourself drunk looking at it, but
thus you have 85,000 people pull their houses off the market because they don't have to sell. That's you took it the exact same way I took it.
Well, we've got a note here that lowering the price doesn't make sense. No buyers. Depends on your market.
Yeah.
You just heard what happened to Dan.
I don't want to give my mom's address, but I can, after it sells and everything, I'd be more than happy to come on here and give you the exact address if you want it, and you can fact check me. Yeah,
because it depends on the market. Over here, our high-end market over $1 million it's just killing it. I mean, it's just absolutely on fire. And place like Paradise Valley and Scottsdale. When I track this chart here that I'm going to show you, this is the yellow mass here. This is new listings. So I take a new listing back on market and I subtract canceled, subtract expireds, and that's the number I get, the yellow one. The black one is the number of contracts, the number of buyers. So what you're looking at is the gap between the two. Right now, the buyer traffic is coming down because of the holidays, but there's still more buyers than there are new listings coming on. New listings were growing in here in this middle part because we had more new listings than contracts, but these contract numbers have hung around 2,700 to 2,800 for months. So they're out there at that rate. Is it huge? No, it's pretty small, but we're still finding homes selling. I know Jackie said that she had 3 contracts already.
Wow.
So we got here the comment that says, been seeing this a lot. I'm looking in the Munster area, lots of properties, but also lots of price drops and delistings. Now, the delistings are people that are not desperate.
They'll be back.
Couldn't get it. Yeah, they'll come back. Don't know. That's Munster, Indiana. We have a question. What's your current mortgage rate? Drop it in the chat. Let's see where everybody is.
That might be me.
Oh, you did that. Okay. All right. Cool.
My bad.
That's all right.
When
I'd
I
like
don't
to
have a
know that. I'd like to
moderator,
know where people are.
I have if when I don't have a moderator, I have things clicking in the
You
background.
got a bot, a night
My
bot.
my
I like
apologies.
that. You're so techie. Oh, coming
You
here,
know,
it says current rate is 6.3 since August 2024. So, yeah, I'd like to see what everybody's doing too. Because again, it gets down to that desperation. You want price to come flying down? That only comes flying down when people have to sell.
yeah.
Lost their job, got to move. Got to lower it to prices unknown. Could that happen? That always could happen.
Yeah. Munster, Indiana, that's an area through here. I was just through there just recently. And it's a solid market. It's in Indiana, just outside of Chicago. Chicago's still, I mean, it's still booming. But you see the taxes and everything else we have, and our insurances are crazy as well. That it is odd, but I see on my end, I do see it. There's a huge disparity in the have and have nots. I
Yeah.
mean, it's huge. We'll get people coming out of college with, they're making $28,000 a year with this much in debt, and then you have somebody coming out and they just signed a contract with Google making $180,000 with a $50,000 bonus, and it's just like, and there's so many people that are they're working two jobs and hardly making it, and then there are a lot of people that are just, you have any money in the markets and any investments, you're doing pretty darn well.
Yeah, I mean, but all the complaining about, you baby boomers did this, did that. Okay, well, get in the stock market.
The S&P's been up 25% the last 3 years.
Yeah,
I mean, that's
instead of
you've
just
doubled your
complaining about
money.
real estate being bad because people my age have ruined it. Okay, I get it.
Yeah.
I didn't think I was ruining it. I didn't know.
Yeah.
What else are you investing in? Because there's a lot of stuff that still went up. Tons of stuff. I got a question here. How will Japan rate affect the 10-year Treasury and our rates?
It will. I can jump on that real quick. So what's happening in Japan, if anybody's watching this for rates, Japan has increased their interest rates. So what that does is, think of it, Rick and I are talking about investing. So you have money, you got, you're a country or you're a company or a billionaire, you have all this money to invest. You want to invest in something secure, so you want a bond. So, okay, you can look at the Japanese bond, the US bonds, this and that, and you rate them. You say, okay, who's got the highest rates with the best for my position? I'm not looking for highest rates and whatever. So Japan's been raising their rates. Now, what the concern is that going to take Japanese investors to stop investing in the U.S. and start investing more and more in Japanese bonds? And then if that happens, bond rates, prices will go down and rates will go up to attract more buyers. So that could push up rates. That's not what we want. So yeah, it could affect how the markets handle, all this stuff. So subscribe to my channel down there if you guys are watching this for interest rates.
Yeah, because you can really get in the weeds. You share some great stuff.
Yeah, if you're just watching for rates, it gets a little over your head, and my apologies for that. But yeah, I dive into the weeds a little bit deep.
I like that. How will we stimulate the 73% of mortgages in America that are 5% and under? Well, we won't. That's why I think, like we've said earlier, we're going to be here a while.
Why stimulate them? I mean, it's just, over history now, it's like, okay, I'm sitting on a house. Historically, I gain 4, 5, 6%. Yes, I have a rate at 2.5%. I'm good. Unless I have to move, I got a bunch of equity in the house. If I need to sell it, I sell it, but I'm good.
There's no incentive to move. I mean, at first you'd say, man, I got a 5-bedroom house. The kids have all moved out. We got to get something smaller. Now you look and go, let's just hang onto it. Now we got room when the grandkids visit. So
exactly. Yeah.
Unless they're my kids. I don't have any grandkids.
Oh, I didn't tell you.
No.
I should tell you behind the scenes. I am going to be a grandpappy here soon. My son who works with us, they came in a couple weeks ago and said that she not only got a job, they're moving to Long Island. She's a ER doctor. That's where she's from, but she's also pregnant, and that'll be our first grandchild. So,
well, congratulations.
Pretty cool news.
Yeah, that's fun stuff. I live it vicariously through other friends.
just call me and I'll send you pictures. Some are good, some are bad.
That's some of my classmates got about 10 grandkids. What?
Yeah.
So, how did that happen? Of course, I got married right out of high school. So
I did too. I got married at 22.
I'm talking 19.
Oh yeah, yeah.
Yeah.
But that's odd. Think about it. I got married at 22 years old. I'm 60, so I've been married a long time.
Well, you're still a kid. So
Yeah, I
I
tried.
just turned 71 last
God
week.
bless you, brother.
I made it. Yeah.
You made it.
So I don't know what I made it to, but I got there. So I think, the other thing I'm seeing too, tell me what you think. We're going into January.
Mhm.
Optimism is everywhere. The first of the year always means something.
Yeah.
And January comes, we have more listings and the sellers don't increase. So then February, we got price reductions and March delistings. That's how I see the first quarter rolling out because it's going to be just
Yeah.
like last year. Now, last year you had November, but he wanted to wait. Can't
Yep.
do anything. Got to figure out who the president's going to be. January. Oh, geez. Now we know who the president's going to be. I got to wait. And then April.
Tariffs.
Oh my God, tariffs. This is going to be awful. And even right now, the Fed, Bostic expects no rate cuts in 2026 due to worries GOP tax bill may fuel inflation. So everybody's got something to worry about, but everybody's optimistic going into January.
Yeah.
And I've kind of been on my soapbox that if your home is listed in December, leave it. You have nothing to gain by pulling it off in December, putting it back on in a few weeks.
I don't know.
So
That's me again, my thingy.
I
mean, my thought is here's you were going right down this path is there's always an excuse, so, and I don't mean that in a bad way, folks. I mean, if you're a homeowner right now, your rate's 7%, there's an excuse. I'm not going to refinance because it's going to cost too much or things like that. But there's always an excuse. So people have been sitting on the sidelines waiting for housing market to crash. Some markets did go down and good for them. Then, rates hit 8%. Now they're at 6%. So now it's not rate. So now what's going to happen is, like you were saying, now it's going to be low. Well, the Federal Reserve is going to come in next year and they're going to cut rates. So I'm just going to wait for the Federal Reserve to come in and cut rates. And then I'll go and start looking at a house. By that time, and my son actually just came out with a calculator, and it was pretty cool because you plug in the numbers and then you hit it and say, okay, let's say I want to wait 6 months or 12 months for rates to even go to 5.5 from where they are today. Does it make sense to wait? And it actually analyzes it for you and gives you right there the math behind it. And I'm like, and you look at it and it's like, I didn't even look at it that way. It's pretty cool. So we'll be launching that thing soon. But yeah, everybody has an excuse for something. And then you were just saying too, they blame us for the markets. You got to get in the markets, folks. Even if you dollar cost average $10 a paycheck, get a little bit of money put aside. Each paycheck is like a bill. You'll be surprised how over time it grows.
Yeah, you got to be in something. I mean, you've got to diversify your money. If you just got it sitting there and checking and complaining that houses are too expensive, which I get because they are, it's hard to get in a house. I'm not trying to push an agenda here. Like, go out and get a house. You're here and we're rattling off the numbers. Like, if you can't get in, I get it.
Right.
I get it. Do something else. Figure out how to make your money grow.
Yep.
And, whether it's alternate coins, Bitcoin, stock market, just putting it in a money market and getting 4%, anything. Yeah. Just start salting it away. My oldest son said, I really got to learn how to buy stocks. I go, yeah. So
yeah, really. Yeah, it's crazy how I try to start I called it Stock Talk Tuesday. Yeah. Because so many people are just, and look at the videos that do the best. It's always the doom and gloom, the Bitcoin's crashing and all this other stuff. But people really don't tell you that. That's great news. People like looking at a car crash. But I always want to come in and say, okay, but how can you learn off of this? How can you value this? How can you maybe make money at this? So I start coming in each Tuesday just saying, okay, what's the Dow Jones? Do you even understand what it is? And it was kind of cool as I was doing it. It was only getting a couple hundred views. And I'm like, you know what? I just have a lot of other things to do. But it was cool because some of the people were just like, hey, I didn't know that, or I didn't realize that. And that's where the schools fail us, because most people probably don't even know how to, balance their checking account. And, that's tough.
Yeah, and you're right. They do fail us. We don't, they're pushed so many other things. They don't have time for, for finance. Oops, I just about knocked my camera over there. My foot went in and there we are. We're back to normal now. if there's
So
such
you,
a thing.
so you think the market will be flat next year or
I
to
think the
down?
real estate
or just-
market is going to be, I think in my market here, I think we're going to be down on average sales prices another 2 to 4%. I think when I see that the National Association of Realtors says that volume will be up 14%, okay, that's 350 homes for me a week. That's not, big deal.
Yeah.
So I think we'll see some of that, but I tend to look and go, okay, what's going to be the catalyst for transactions to increase? Now I'm seeing a lot of optimism out there.
Mhm.
I'm seeing lenders out here saying that their mortgage applications are up, that their phone calls are up, and so
Refinances.
there may be people getting ready to buy in January, but there isn't anything that has really changed that much. I mean, the price is coming down, and then you look at the 50-year mortgage that came out. They floated that balloon. Well, the advantage of the
Hey,
50-year mortgage, disappeared after a few weeks. It's like,
I
oh,
made
rates are down.
national TV during that, remember?
You did. You were famous as hell.
I was famous for 15 minutes. Sorry, I didn't mean to interrupt your thunder.
Yeah, I was
Yeah,
trying to figure out how you did that. I keep looking at things going, what can I say that'll make I don't care
was-
if I get on TV.
It was freaky because I'm sitting there. Well, this happened about a year ago. Where News Nation they send me this email, and I'm thinking I'm getting, what do you call, catfished or whatever. And I'm like, yeah, whatever. They're reaching out to me. Then the next thing I know, I'm in the green room, kind of like with yours, and it's kind of like this. And you're on there with the lady, and you're talking. I'm like, oh my god, I'm on national TV. And then I got on Yahoo Finance, and then when I was down in Florida couple weeks ago with the 50-year mortgage, I had NBC call me, and I'm thinking, okay, and I called him back, and it was Brian Chang or something like that, and he did an interview with me all about the 50-year mortgage. So I was on Yahoo Finance, News Nation, NBC, and it was like, next day nobody knows about me, which is that was my 15 minutes of claim fame.
Well, it's you what they call your 15 minutes of fame.
Yeah, that was it. And but I don't know how they found me or anything else. But yeah, it was kind of wild because I'm thinking I'm just getting scammed. But
I just got a question here on my end. Said, what's Santan Valley look like for sellers this coming year? I think more of the same. They just started adding Santan and separating it for us, the Cromford Report. And just like I showed earlier, we're just hugging last year. So for sellers, it's just, this can be one of those January. You can just say, well, what happened last January? Let's price accordingly.
Seriously,
So
that is freaky.
You'll want to look and say, okay, what sold in your neighborhood last year. Okay. And you're going to be able to look and say, well, what was the annual rate of either increase or decline that we had? So let's say it's 5%. Take the neighbor's house that sold, take 8% off of that because it's 5% year of the total, and then just take 8% off, price accordingly like that. You'll probably do okay. But if you price it last year or even 3 months ago, you're going to sit there if the market continues to decline gradually. Now, anything below 500,000 right now, which is, pretty prevalent in Santan, it's getting hammered also because in those outlying areas, there's a lot of building going on. So you got to compete against all of those incentives.
So you have in your market, if you have I don't know it, but are there homes like 250, 300 grand?
Rare. There are some.
Okay. I was going to say those things get gobbled up. Like anywhere I see them out there, if it's 200 grand, 300 grand, it's a decent livable. I mean, it's just boom, it gets gobbled.
Well, I can't pull it up on here, but it's like anything. It's drive till you qualify. So you either got to go far West Valley or way in the far southeast down by Santan. And even in the city of Maricopa, which was growing like crazy, is you can find something for in the 350 range. And it's not a piece of junk, because again, they're competing with all the builders.
Got it.
And so we got invited, Pat and I and Jessica got invited to a past client for a little thank you party for helping them get into the house. They got a second home. They helping their son out, and they had us down. He had a backyard that I just can't even describe to you how incredible it is. You just pull in the house, going, oh, okay, nice house. You look at the back, 2 fireplaces, big swimming pool, waterfalls, sunken barbecue area, putting green. I mean, just like the backyard was probably worth more than the house.
Yeah.
So it was fun, especially this time of year when we're 80 degrees. So
Seriously.
well, Dan, it was good to catch up with you.
You betcha,
And let's do it again. I've got an idea cranking around in my head that I think you might enjoy. I'm thinking in January of launching a real estate live happy hour.
Okay.
Mondays at 5.
Okay.
I'm just spitting out that time, Dan. I'm not sure yet. And we can get as many realtors, anybody in the industry, lenders, they just got to sign up so that they can get on a list so I could send them the link.
I'm in.
And just drop in. And we'll just have might have 20, 30 people on the live stream. People can ask questions. We can have fun. I'm just going to call it Arizona Real Estate Happy Hour. So I started working on that this morning. And I got about this far.
How are you going to, how is everybody tuning in? Like Discord or like Teams or something like that?
It'd be just like this on StreamYard.
Oh, cool. Okay.
Yeah, it's just like a Zoom call. You've got a mortgage company out there that does the Breakfast Club.
Oh, is it?
And so I saw that and I thought, that's very intriguing. That would be fun. So, because then you get realtors from all kinds of different brokerages. You get, you're not all singing from the same hymn book.
I was trying to do that with Real Estate Roundtable on a Thursday night. And I'm like, I don't know how many people would join it or whatever. So yeah, count me in because I was thinking of the same thing. Because
maybe a complete dud. We'll play with it, see what happens. So.
I appreciate you having me on here. It's like with me and Pat. I know Pat. I'm not trying to steal any business. I'm good friends with Rick. Use Rick and Pat on all these equations. I just pop in to help just understand all this stuff a little bit more. Keep working with Rick, Pat, and their team. They're fantastic. Like I said, I'm friends with Rick and we talk often, and I just like the guy. So
you
that's why I'm here. All right, man.
My friend. Hey, stick around after I end the stream. So
okay, take care.